Good morning, everybody. Hey, welcome to the last couple days of June. Today is Monday, June 29th. I hope you guys had a great weekend. We did, kind of finishing up the weekend with our new grandbaby, and excited about that. They leave today. So I'm obviously not in the office today and won't be today. We'll be back in tomorrow morning. But I want to thank you for joining us. Dave and I will have a conversation here in just a few moments as we look at where we are today. Friday was definitely not a good day. We are looking like we're going to bounce off of that this morning and have a little bit of green. Not much in the economy this week. Obviously, we're at the end of earnings season. Not much, if anything, in the way of earnings. But Dave and I, we're always finding something to talk about, and that will be coming up here in just a moment. Don't leave us. Stay tuned to Dave and I's conversation.
R-E-M there. Good morning. 8:40 now. It's 20 before 9. Time to check in and find out how Wall Street is treating your investments today, because if you've got an IRA, a 401k, or basically anything not stuffed in an old sock, what we talk about here in the morning does affect you and your retirement. Downtown Sebring, we head to the offices of Statler Financial Services, and Phillip Statler is standing by. Phillip, it's one of those Monday mornings where there's not a lot of data coming out, but we got a whole bunch of news tidbits to share this morning, don't we?
Well, yeah, at least a little bit here, a little bit there. Some of it deals with the market, some of it doesn't. But we at least have some tidbits today anyway, Dave.
Absolutely, that's a beginning anyway. Setting the table for the morning, basically jitters over the coronavirus surge, especially in red states. Not nice to the indexes on Friday. The Dow started out with kind of a pink tinge to it when we started the morning out, but we ended up down 2.84%, down 730 points in one day. That, even in today's world, is a crummy day. NASDAQ was down 260. Standard & Poor's was down almost 75. It was just basically one of those poster child days for why a conservative strategy makes sense, wasn't it?
It definitely was. You know, we talked about how volatility is going to continue to play big, and it is going to continue to play big. You know, a lot of people thought we'd see a V bounce in the economy. You know, I think that notion is pretty much gone. You know, it's going to be interesting to see what the GDP number is for the second quarter. We know the first quarter was down -5. So there's a lot of stuff still to happen, and I think that we're still going to see some drag on this economy. And whether or not companies can start making money, that's going to be the key.
Absolutely. Eventually, right, we've got to actually make the uptick in stocks matched by profits, and so far we're doing it on expectations more than we are actual track record. Among those tidbits we were looking at, the thing I caught my eye on was the federal government and the body of the Federal Reserve released some of the companies whose debt they were buying when they announced last month that they were going to be buying more corporate debt. We now have a chunk as the body politic of Coca-Cola, Berkshire Hathaway, Marriott, Philip Morris, Walmart. At the very least, if we got a lot of companies owing us money, Philip, it's nice to know they're marquee companies anyway, right?
Oh, that's so true. You know, you and I talked earlier about how are they going to pick which companies' bonds are they going to buy? You know, who are they going to help prop up? And at least now we do know that, at least it seems like, they're going to pick the name brand companies that are household names for you and I, and hopefully that continues to be the mode of operandi that they continue to draw off of, because otherwise it could get a little hairy.
Yeah, I mean, looking at all the bankruptcies, all of the businesses that have been falling on hard times, got another one we'll get to in a minute. We buy debt from a company that goes toes up. That's not going to go over real big on the Fed's balance sheet.
No, it won't, and it will be devastating to them as far as their philosophy and their procedures to doing what they're doing will definitely come called into concern if that happens.
Yeah, I mean, they'll call a congressional investigation over overpaying for pencils. I can imagine what the hue and cry out of Congress would be. Speaking of bankruptcies, one that we'd been watching and have been hearing rumbles about for some time has filed, Chesapeake Energy. They ended up going bankrupt. Was it over the weekend or at the end of last week?
I think it was over the weekend. It hit the news wire this morning, so I'm thinking it happened over the weekend.
When the energy companies start going down, that's if memory serves, they're a utility, aren't they?
They may be, but for some reason I was thinking they were in Shell Oil too.
That could very well be it. I know we've seen tidbits about them being in difficulty now for a number of months. We had some other tidbits in terms of buying and selling and whatnot, and it really is affecting an old name in cosmetics because I'm looking at my pre-market, and Coty Cosmetics is up by the better part of 19% in pre-trading. And gosh, they're buying another popular name, aren't they?
They really are. You know, earlier this year, they bought Kylie Jenner's 51% of that company. Now they announced they're buying 20% of Kardashian West's, her product line, and they're going to own 20% of that company. And I guess the stockholders really like that because you're right. My number's not quite as good as yours right now. They're up about 16% though.
That's still an amazing increase off of buying some brands. You and I were kind of cracking wise before we went on the air. We're not of the generation that necessarily follows the Kardashians, but Coty is an old line name, and that kind of extends them downward into the younger generation, which I've got to assume probably is the reason that they're getting such a positive bounce off the purchase.
I'm guessing so too, Dave. I mean, it's they're still down at the bottom of their 52-week low. I mean, their 52-week low is $3 a share. They're scheduled to open up about $4.85 right now.
Yeah, I'm going to say it doesn't look like a particularly expensive stock. I didn't know where it was on the range, but under $5 is not a heavy-duty share, is it?
No, it's really not.
And we got some news out of Boeing as well, and this is legitimately good news for the big-ticket items.
It is. You know, they are starting the process today of recertification flights for their grounded 737 MAX, meaning they're going to start recertifying pilots. So I think that's a significant step and a good sign for them. And it's helping their stock this morning, too, up something like getting close to up 6% this morning.
And that's, I don't know where they are in their 52-week cycle, but given the fact that Boeing's had basically nothing but bad news recently, I'm assuming they're somewhere toward the bottom of their 52-week range, aren't they?
Actually, Dave, they're kind of in the middle. Their 52-week range, they've been down as low as $89 a share and as high as $391, and right now they're trading about $180.
I guess that's called faith by their investors that they can come out of the problems they've been having for the last 2 years, right?
I'm thinking so.
All right. I know I've got some reports coming out later on today. I'm not 100% sure what would be left in the housing market, but my calendar shows a couple more pending sales reports that are due out in the housing market later on this week. Have you seen anything coming up later on today as far as expectations?
No, I don't have any expectations. I can tell you what they're looking for, though. They're looking for the pending home sales. So they're looking for the pending number sometime today. And I don't know what the expectation is. My folks don't cover that one.
All righty. Yeah, I thought we'd pretty much finished up most of the housing reports last week. When I saw them come up on my calendar, I wasn't 100% sure which report was due to come out. But housing obviously moves the market effectively when we get a big surprise to the up or the downside. So that really, over the next 24 to 36 hours, is pretty much all I see as far as market movers until we get to the end of the week when we start talking employment again.
Yeah, we'll have employment. Now, there are a couple things that come out tomorrow. We've got the Case-Shiller home price composite comes out. The Chicago PMI comes out. And the big one probably tomorrow is going to be consumer confidence.
Now, that will matter a lot, obviously, in the current environment, won't it?
Yeah. And none of those come out before you and I talk, but they'll come out. They'll be our talking points come Wednesday.
It'll definitely cause us a Wednesday busy agenda as far as that's concerned. Down day on Friday, that generally results in a maybe we overreacted day in the day that follows it. 45 minutes before we open this morning, Phillip, are we looking at a lot of green ink or just a little bit?
You know, I guess it's a mixed bag today, Dave. We're seeing the Dow fall off of its high down to they're up 127 points, which is about 0.5%. The S&P 500 is up almost 8, which is about 0.25%. However, the NASDAQ is heading the other direction. It's red by $16, down less than 0.2%, but nonetheless, it is down this morning. If we look at the rest of the commodities, we've seen some changes since I started looking this morning. Silver is down 0.75%. Gold is even right now. And we've got crude oil up 1% to $38.89 a barrel.
I'm kind of getting the feeling we're establishing a trading range for crude oil for a couple of weeks here, don't you think?
It's looking that way. We're just having a hard time staying up over 40.
Yeah, it tests 40 and then goes right back down into the upper 30s, but we're not tanking down into the low 30s again. It looks like we got a comfort zone that we could stand to be a little higher on for job purposes in the Southwest. Overseas markets, by and large, Asian Rim markets followed our lead from Friday. They were off substantially over the weekend. At the close this morning, Japan was down by over 2 1/3. Europe, on the other side, is kind of watching our futures and seeing a little optimism. They're up marginally halfway through their day. Phillip, the ups, the downs, we don't know which way it's going to go, and a lot of it is determined by things that have nothing to do with finance, like, viruses. That means good advice for stabilizing a retirement fund makes sense. How do I find you to get that advice?
Then give us a call at 863-382-0037 to schedule their financial x-ray. Just call us. Let's schedule a 15-minute phone conversation to see where you are and if you're on the right track or not. Follow us on Facebook, Statler Financial Services. Look for us there, like and follow our page. You need to go back and look at Fridays because we got a little special there that I think you'll find, it's a granddaughter. It's pretty impressive to me. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
Yeah, I must say you have the absolute cutest guests to start out your shows.
Thanks, Dave. Appreciate it. They're heading back today, so we're heading to the airport here shortly.
Give them a hug for me. Thank you very much, and we'll catch you tomorrow morning, all right?
All right, thanks, man.
Take care. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, thanks for joining us today. I hope that your weekend was great and that your week is off to a great start. Take care, and I look forward to speaking to you again tomorrow.